Hey, Mark, we get a lot of questions from investors on what is the deal? What's in the portfolio? Would you mind going in and explaining that a little bit for
You bet, I'd be happy
people?
to. So, a lot of people ask that question, and the short answer to that question is it's private equity. This is a private equity fund, so we're investing in the equity in private companies. However, it doesn't stop there, because this is what is determined as an inefficient type investment, meaning that it's subject to the unique swings and variations of the private markets. We then add other things into that portfolio to ensure that it gets the higher returns. In other words, you protect the investment return by investing in derivatives, swaps, options, wraps, all those kinds of things, structured products that are designed to help ensure that you get the kind of returns, overall returns that you want to get for that investment portfolio.
Great. And then that will lead us into our second question that we get a lot. How can we get such great returns in our portfolio? Isn't there a lot of risk involved with that?
Well, everything is designed to mitigate risk. Obviously, we've talked about risk a lot through risk-adjusted performance measures. However, there's things that you can aggressively do, or assertively do, I should say, that help protect the value and the returns in this particular portfolio. Before I do that, though, I want to mention that there are two types of major investments. There's efficient markets and inefficient markets. And your efficient markets are your stocks, your bonds, your options, even your REITs today are considered efficient markets, which means that you do have a relationship between risk and reward. There is a risk-reward trade-off. But when you get into the inefficient markets, you have things like arbitrage, you have things like derivatives that can be used to help bolster those returns, those higher returns. And they do bring higher returns without as much risk. In fact, one of our instruments is a type of product that is designed to give you the safety of an annuity or the safety of a treasury, with all that implies, but with a rate that keeps up with inflation. How about that? And so these are the kinds of things that we do with our private equity products to be able to then ensure that our clients get the returns that they deserve.
Great. Thank you so much.